Good morning, all of you. Today we are going to discuss valuation of perquisites and tax implication of our perquisites. Yesterday we had discussed the meaning of perquisites and types of perquisites. Today we are going to different perquisites which are taxable under the head income from salary. One by one, let us see. First one, valuation of perquisites. There are different perquisites we have. First one, sweeper, gardener, watchman, or a personal attendant. It's a taxable perquisites. Another one, expenses paid or payable towards these for the benefit of the employee will be the perquisite value. See, suppose an employer provide a sweeper or a gardener or a watchman or a personal attendant to his employee. This is called perquisite. We have to calculate the value of perquisite in such a situations. So there is a question how to calculate the value of perquisites. See, very simple thing, that is a sweeper, gardener, watchman, or a personal attendant is a perquisite. Calculation is based on this rule, that is expenses paid or payable towards these for the benefit of employee will be the value of perquisite. It's very simple thing. How much amount which is paid or payable towards these by the employee will be the perquisite value. Then another important perquisite, that is gas, electricity, or water. Suppose an employer provide gas or electricity or a water to his employee, it is a perquisite. How to calculate the value of perquisite in such a situations? Very simple thing. Amount paid or expense incurred by the employer towards this shall be the perquisite value. Amount paid or expense incurred by the employer towards this shall be the perquisite. There is no need of worry about the calculation of these two important perquisites. It's very simple thing. But an important point that you have to bear in mind while calculating this, any amount which is recovered by the employer from the employee towards this, that we have to deduct. Once again, any amount which is recovered by the employer from the employee towards this. Suppose an employer provide a sweeper free of cost and charging rupees 100 towards this from employee, payment of salary to the sweeper. Clear? So what do we have to do? Amount salary paid by the employer towards the sweeper is the perquisite value less 100. Clear? This is the logic behind this one. Then next one, that is education facility in the institution of the employer is another perquisite. Education facility in the institution of employer. Two conditions that we have to fulfill here. First one, we are already discussed education facility. Here it is not education facility. Don't misunderstand with these two terms. It's education facility. Previously we have discussed education allowances. And one more condition, that is institution of the employer. If in such a situation, if the cost of education per child does not exceed rupees 1000 per month, the perquisite value nil. Okay. Suppose an employer provide a facility of education to his in his institution. Such facility is not exceed rupees 1000 per month. No perquisite value. Clear? There is no calculation of perquisite value. Nothing we have to bear in mind. Then when it is exceeds, if the cost of education per child exceed 1000 per month, cost of such education in similar institution nearby the locality will be the perquisite value. Once again, if the cost of education per child exceeds rupees 1000, if it is not exceed, no perquisite value. If it is exceed 1000, what will be the perquisite value? Cost of such education in similar institution in nearby the locality will be the perquisite value. Once again, not the point, any amount recovered from employee should be deducted. Clear? Then one more important noted point, that is if an education facility is provided other member of the household or education facility is provided in other institution. Two condition. Education facility is provided to other member of the household. Clear? Then which is provided in other institution. What we have to do? Cost of such education in similar institution nearby the locality will be the perquisite value as in the same case here. Clear? Then any amount recovered from employee should be also deducted. Okay, these are all the important point that we have to mind. So three important perquisites we are discussed. Then one more thing, that is fringe benefits. Before going to discuss in details, let us see what is meant by fringe benefits. Is an extra benefit supplementing an employee's money or a wage or a salary is called fringe benefit. Is an extra benefit. Any extra benefit in addition to the wage or salary is called fringe benefit. We are discussed perquisite. It's a casual emoluments attached to an office or a position. Don't misunderstand with these two words. Fringe is different from perquisite. Perquisite is a casual emoluments attached to an office or a position. Here fringe means any extra benefit supplementing to an employee money, wage or salary. For example, company car, mobile asset, private healthcare, etc., etc., etc. Let us see one by one in detail. First one, interest free or a concession rate loan. Suppose an employer may provide a loan at free of cost, getting no interest. Otherwise, there is a concessional rate of interest. Clear? The next one, use of mobile assets. An employee can use vehicles or a car which is used by the employer for his purpose or for official purpose, or both personal purpose or official purpose. The next, transfer of mobile assets. Here there is a mistake. Transfer of movable asset. Please bear in mind, transfer of mobile asset. Then next, what we say, that the gift is given by the employee. The next, that is valuation of car is provided by the employer. The next, more than one car. Then valuation of free meals. So these are all the calculations that we have to discuss today's lessons. First one, that is interest free or concessional loan. Loan not exceeding rupees 20,000 is fully tax free. Perquisite. In such a case, interest on loan need not be valued or added with the salary, only because of it is a tax free. Point you have to note down. Loan not exceeding 20,000 is a tax free perquisite. Clear? Again, one more point. In the case of loan advances for the treatment of any diseases specified by the CBDT, you know CBDT, Central Board of Direct Tax, the value of perquisite will be nil. Clear? In all other situations, two situations. First one, amount 20,000. Second one, specified diseases. In all other situations, the loan amount exceeds 20,000, or when the loan is not for the treatment of specified diseases, the value of the perquisite will be equal to the interest concession allowed to employee. Clear? Very, very clear. Two situations. If in all other situation means two situations we have. One is that below 20,000. Another one, loan for specified diseases. Other situations, when the loan is the value of perquisite will be the equal to the interest concession allowed to the employee. Hence, what you have to do, concession in interest rate means the normal interest charged by the State Bank of India on similar loan less interest charged by the employee. Clear? So what is the charge? Suppose the SBI charge 9%, employer provide 3%. What will happen? 9 minus 3, that is 6. 6 is the perquisite value. Interest on maximum outstanding monthly balance advance is considered to determine the concession in interest. Clear? So it is very clear. The next one is, that is movable assets. Any movable asset other than, please note the point, any movable asset other than computer and laptop provided by the employer for the use of employee is taxable. Other than computer and laptop is taxable. So what is the perquisite value? Asset belonging to the employer. Suppose an employer own these movable asset and is allowed to use, in such a situation 10% of cost of asset per annum is the perquisite value. Clear? 10% of cost of asset. When asset is taken on rent by the employer and is allowed to use, then such situation actual rental charge paid by the employer is the perquisite value. Clear? So on noted point in this situation is asset used by the employer for more than 10 years will not be taxable. That is saturated. The next one, that is there is a spelling mistake, transfer of movable asset. When an employer transfer any movable asset to employee or to the member of his family, its value will be computed in three situations. Let us see one by one. First one, computer and other electronic items. Suppose an employer provide computer and other electronic items. What will be the perquisite value? Actual cost of asset less depreciation at the rate of 50% per annum for each completed year of the use of assets under return on value. This area that I will discuss in our next video in detail. Clear? That is somewhat lengthy. That's why I will include this area in our next video. Okay, the next one, that is gift. Gift in kind given to an employee on special occasion of value up to rupees 5,000 is not taxable. Gift to employee in cash or convertible into cash is fully taxable. Gift in cash is fully taxable. In kind is taxable when it is exceed rupees 5,000. Clear? Then next one, that is valuation of a car. This is also somewhat lengthy. That is why I will include a special separate video for valuation of car and valuation of mobile asset. At that time we will discuss in detail. The next one, that is perquisite value of meals. Sometimes an employer may provide free meal. So what is the perquisite value? Please note, the cost incurred to the employer in excess of rupees 50 per meal is taxable perquisite in the hands of employee. However, food provided in working hours in remote area or in an offshore work site is not taxable. Please listen my words. Food free meal is a taxable perquisite, but food provided in working hours in remote area or in offshore area is not taxable. It is tax free. Food provided at offshore or a remote area is tax free. In other situations, cost incurred to an employer in excess of rupees 50 per meal is taxable. So up to 50, up to rupees 50 is tax free. When it is exceeds, the excess amount is taxable. In excess of rupees 50, meal is taxable perquisite in the hands of employee. So these are all the important perquisites coming under the category of taxable perquisite. Okay, let us see last important area in our first video, section 15, 16, 17. We are discussed at that time profit in lieu of salary. So here we can see what is meant by profit in lieu of salary, what constitutes profit in lieu of salary. Profit in lieu of salary means the amount of any compensation due to or received by an assessee from his employer or former employer at or in connection with the termination of his employment or the modification of the terms and conditions relating thereto is regarded as profit in lieu of salary. It may be asked as a question for your exam for 1 mark. What is meant by profit in lieu of salary? At that time, this definition or this meaning is very beneficial for you. Amount of any compensation due to or received by an assessee from his employer or former employer in connection with the termination of the employment or the modification of the employment is regarded as profit in lieu of salary. So important profit that include otherwise profit in lieu of salary consists of compensation for loss of employment, compensation for loss of employment or modification of the terms of employment. The next one, payment from unrecognized provident fund or superannuation funds. Payment from unrecognized provident funds. The next one, payment under key man insurance policy. Then the last one, that is payment before joining service or after the retirement from the service. So these are all the important items which constitute a profit in lieu of salary. Clear? Let us conclude today's video by these words. Now tomorrow we will discuss two things which are discussed today, that is valuation of car and valuation of movable asset. A single video itself is prepared to describe and discuss these two things, valuation of car and valuation of movable asset. All of you please listen these videos. Thank you to all.